everybody should be owning gold and silver. I mean, it's absolutely just an imperative because everybody should own it and because it's so beneficial. It seems that there are some very powerful entities, be it the U.S. government or the banking industry or Wall Street, that do not want you investing in it.
Hello and welcome to Pillars of Wealth Creation, where we talk about creating financial success with a special focus on business and real estate. I'm your host, Todd Dexheimer. Now, let's get to it. Hey, welcome back to the show. I'm your host, Todd Dexheimer. I'm excited to have Brandon Thor. Brandon, how are you doing today?
I'm good, Todd. How are you?
I'm doing great. Man, all smiles right now. You told some good stories before we hit record. We maybe should have been recording before, but whatever. So anyways, Brandon is the founder and CEO of Thor Metals Group. It's one of the fastest growing precious metals dealers in the U.S., scaling from just $100K to a national leader in under 2 years. And the firm was named a Best Gold Dealer in 2024, Best Gold IRA Company in 2025. And Brandon, you launched the company to challenge the gold industry's kind of worst practices. So let's dive in, kind of who you are, and then we'll dive into those practices and what you wanted to disrupt.
Sure. So, my background was I spent half my life in school, basically. So, I went to undergrad at USC, fight on. Then I went to law school and then realized very quickly did not want to be an attorney. So then I did that JD MBA program, so got my MBA as well. And then graduated and realized just as quickly that I don't know if I wanted to work. I'm joking. So basically I started in investment banking. I worked for Guggenheim Partners. And then I got into hard assets. So physical gold and silver. And I started out, brokering the deals. And man, it was something that was, when I worked at Guggenheim, it was a barbaric relic. Nobody really talks about gold, not a lot of visibility on that market. And it wasn't until I got into it that I was like, not only is this a worthy investment, this is freaking lucrative. I mean, especially with what's been going on and what drives the price. So that's kind of what attracted me to actually getting into the field. And then, of course, 10 years as a broker, then managing director. I worked for two national dealers. One I was the SVP, the other I was the managing director. But all that time, I learned two things. One was everybody should be owning gold and silver. I mean, it's absolutely just an imperative for a few reasons I'm sure we'll launch into. But the second is that because everybody should own it and because it's so beneficial, it seems that there are some very powerful entities, be it the U.S. government or the banking industry or Wall Street, that do not want you investing in it. And so there's a lot of information that's suppressed. You don't really see it a lot of, in the headlines or on CNBC and whatnot. And then, of course, it's not regulated really. So, whenever you want someone to feel safe about something, you regulate it, right? Like annuities or something like that. There's a lot of regulation. Whenever you don't, you do the opposite. So what I noticed was with metals, it seemed like it was purposely unregulated to an extent because it wasn't the worst thing in the world that you hear these horror stories of, people, paying $8,000 for an ounce of gold or, buying gold that fell off Jolly Roger's pirate ship. It wasn't the worst thing in the world, right? That the industry had a little bit of a black eye. And then that's what led me into starting this because, I found that, hey, this is a really, really good investment. This could really help people. But the nature of the industry as it stands now is the Wild West. And no one's coming to save the investor. So I need to kind of do it myself. I need to start a company that, self-corrects.
So let's talk about that, like the self-correcting, what happened in the industry that you maybe didn't like, or like, how have you changed things? How have you self-corrected?
Sure. So look, let me start by saying this. The first thing I learned was if you pull back the curtain on something, like I was like, oh man, I'm just going to show everybody the truth on this industry. the thing that happened was not I got a lot of business. It was people just decided they weren't going to invest in gold. Like, screw this, you know. So that's what I first learned. All right. So I learned that I needed context like these podcasts to
Yeah.
really explain it, you know. And so here's what it is. I mean, gold and silver are a very easy investment to wrap your head around. All right. It's something that's physical. So you're not, you know, risking Bernie Madoff being involved or, you know, some middleman or something. But here's the deal, because there's not readily accessible education, because, you know, there's not a lot of people that, you know, presently invest in it. You're really relegated to trusting the broker who's teaching you about it, right? And so that leaves a lot of, I guess, room for predatory business practices, such as, you know, making up things that aren't true about the metals that you're being sold. You know, a lot of these companies, what they do is they'll sell proprietary coins, which are coins that are made just for them. All right. Now, what that creates is a situation where you, as the investor, can't find them online because they're only made for one company. So now you're stuck trusting whatever the broker's explanation is for why you're paying, you know, $8,000 an ounce. Like, wait a second, why is the gold American Eagle this and this is 4x that? You know, but again, because it's only made for that company and you don't have really a basis of comparison, you got a silver tongue broker. You know, you can see where I'm going. Yep. So basically, that's just one of the things. And there was other predatory tactics that I saw, and I figured, you know what, I'm going to start this company, and I'm just going to do things the right way, because if invested in the right way, gold and silver are terrific. I mean, especially right now with all the uncertainty and the, you know, everything facing the dollar. And the right way is just, frankly, just selling universally recognized metals, just metals where you can just, with a simple Google search, see what it's worth, what you're paying, and you know, and all that good stuff.
Are your clients buying actual, like, the physical gold, or are they buying like, you know, piece of paper that is gold? Right.
Yeah, no, it's a really good question, and it's a crucial distinction. They're buying physical metal, so they're buying actual coins and bars that would be their property. Now, the reason why some might think it's a piece of paper is because a lot of my clients, they're acquiring the gold inside of IRAs. All right. Now, if you acquire inside of an IRA, then just like you don't have your IRA money in a checking account, it has to be held where the, you know, IRS knows where it is. So it's held in a depository. All right. But it's physical as the day is long. I mean, this is the actual, you know, real stuff.
If you're going to buy it, like, let's say I come to you and say, hey, I got some money, I got some cash, I want to get some gold. Am I going to be able to buy a gold bar? Like, just sit there. I kind of just want a gold bar just sitting at my house.
Yeah. Okay. So you're going to be able to do that. Okay. And you're going to get it. It's going to be fully insured. You're going to sign for it. And the one thing is that you might want to punch me in the face, and I'll tell you why. Because it's not like the movies. All right. So you're thinking you're going to get like some James Bond gold bar, and you're going to get a thumb drive. Okay. Like a 1 ounce gold bar literally looks like a thumb drive. Right? The gold bars you see in the movies, those are like $500 million now with the way gold's trading. So yeah, it's very hard.
It's not gonna look that cool. I'm not gonna be able to show it off to all my friends.
It'll be less than impressive.
Yeah. Want to see my gold bar? Yeah, show it.
Show like 3 like thumb drives.
Looks like an Oreo cookie.
Exactly.
That's dang. I wanted the big, huge, you know, gold bar. A couple. I wanted like 5 of them so I could stack them into a pyramid. That's what I was hoping for. You're saying I'd have to come up with a couple bucks.
Okay, so I know what you're picturing. They're called kilo bars. Yeah, you'd probably have to come up with about $5 million if you wanted to get a couple of those.
That's amazing. Yeah, gold prices have gone up really nicely over the last, you know, few years. What's driving the desire and obviously the prices for precious metals right now?
Sure. So, you know, precious metals are really easy to wrap your head around, to the extent that they're driven by 3 major factors. Okay. One is going to be the currency, the dollar. All right. So I'm going to explain it very elementary. All right. So inflation and those things drive precious metals prices. And the elementary explanation is this: as the dollar buys less, it takes more of those less valuable dollars to buy that very same ounce of gold or very same ounce of silver, because you cannot print gold, you can't print silver. Now, of course, that's an incredibly simplified answer, but again, because you can't print the metal, it's always been that eternal measuring stick of value. And so, as we're printing money and amassing debt, people are finding that metals are a great place to house their wealth, and of course, that drives up demand, hence price. Okay, so that's number one. Number two is when people are worried about uncertainty in the world, geopolitical uncertainty, they run to metals because metals are certain. Metals are in the Bible 400 times. So they know that, hey, no matter what is going on or how it shakes out, gold and silver will be there and will have value. And then the third thing finally is kind of related to that, which is if people are worried about their fidelity accounts, like their other investment, the stock market, the bond market, gold and silver are a safe haven for the same reasons. It's just something that's more certain. It's something that you can, house your wealth in, that it isn't going anywhere, and will always, have value.
Yeah, I mean, the first one makes a lot of sense to me on a very simplistic level, right? It's as things become more expensive, gold essentially has the same, value. Of course, the value goes up, but gold has that same value because the dollar is actually eroding. So you can now buy more because the dollar, or the dollar, whatever, a house is going to cost you X amount of dollars because the dollar's eroding in value, right? And that same piece of gold is now worth just so much more.
Yeah. Now watch this, Todd. I'm gonna crystallize this in a good example. So in 1920, we actually had gold as part of our currency system. Okay, so the 1 ounce gold coin is called St. Gaudens, and it was worth $20. All right, so you could buy a nice men's designer suit for one of those. All right, in 1920. Okay, 100 years later, $20. I don't know where you shop, but that's not going to get you dress socks, right? But an ounce of gold, you could get a pretty nice suit for $4,000. $4,000 suit's a pretty nice suit. So we're talking a century has gone by, and an ounce of gold has held your wealth, whereas the dollar has completely plummeted. So that's just a good example of
that's a perfect example. And same thing with the house, right? If the house costed you 50 of those gold coins, you could buy a really nice house still for 50 gold coins. Same thing with the suit, same thing with everything. So that makes a lot of sense how you can put it into perspective there. But at this, that same dollar is not even close, right?
Exactly.
You had $20, man, you're not buying a suit.
No, and that house thing in the year 2000, okay, the average American house was $116,000, okay, or 400 ounces of gold, because gold was $300 an ounce. All right, now the average American house is $460,000 or 160 ounces of gold. So if you just held gold, you literally be able to buy more houses. And if you just held dollars, you now would be able to buy like 1/4 of a house.
Yeah, jeez, that's amazing. That's man, putting it in perspective makes it so much easier to understand the value. So why do so few people actually own, gold and really any precious metals? Like there's just not a lot of people that own it. I think I've heard it's like gold is like 2%, 3%, something like that. Maybe it's even less.
0.5% of the investing public invests.
Okay, so I was way off. That's ridiculous.
But think about it, right? Okay, because there is a disconnect because that same 1% anybody that has a wife or significant other, if they buy her jewelry, they're not double taking their credit card bill when they see the price for that gold necklace or gold earrings, right? Mm-hmm. So everyone knows it's valuable. Where is the disconnect? And then you start really drilling down and you think, okay, if I invest in gold, that's money that's coming out of the bank, right? That's money that's coming out of the banking system. If I have money in the banking system, the banks can actually lend that out, 10x or whatever it is, and they can make money on that. So the banking system does not want you in gold. Wall Street If I put money with a financial advisor, he's making fees, assets under management, trading fees, everything like that. Okay, you can't really justify a gold babysitting fee.
Yeah.
Well, a junior associate stare at your gold all year. You can't really justify that. And then you have the U.S. government. They would love for you to put your wealth in IOUs, or loans backed by them, because that's what a dollar federal note is, right?
Yep.
And so you can print them and continue to amass debt. So you have the most powerful government in the world in $2 trillion industries not wanting you to invest in something. What do you think is going to happen?
Yeah, that makes a lot of sense. Yeah. So I never thought about it that way. Yeah. No, who wants you to invest in gold? Nobody wants you to invest in gold. I mean, very few people, right? You don't mind people investing in gold, but very few people do. And there's not an incentive. Wall Street just surely doesn't want you to. Usually the U.S. government doesn't want you to, and banks don't want you to. Like that's who runs the country right there. Is those three entities pull a lot of strings in the country, and so yeah, nobody wants you to invest in gold or any other precious metal because it just sits there and it doesn't make them money.
Doesn't make them money. Who does it benefit? So think about it. Even if you buy it from me, okay, I want you to buy gold because I make a commission off that, right? But once I make my commission, if gold goes to $10,000 an ounce, can I come in your house and chip off a piece and say, see, I told you I was right on the gold? No, it benefits you. It's a sovereign thing. So whenever there's something that massively benefits the individual, that's a no-no. Usually the powers that be do not like that. So yeah, I mean, the sovereignty of gold is seen as a massive negative to these big industries and to the U.S. government.
Gold has gone up a lot in value recently. Do you feel like there's still opportunity to get into, gold or any other precious metal? Let's talk gold first. Is there an opportunity to get into gold still? Does it make a lot of sense, or is it, it's gone up so much? Is it maybe not the right time right now?
It's a fair question, and I always this is what I pose to people that ask that. I think that it's an unfair metric to just say that because something's the highest it's ever been, that it's too expensive or you missed the boat, because if you use that metric, then you would have not invested in Amazon when it was $42 a share back in 2003.
Fair.
I mean, you got to look at what is driving it. And if those factors that are driving it are going to continue or dissipate, right? And so we just went into this just very briefly or a little bit of time ago. So gold's driven by what? Inflation, geopolitical uncertainty, and markets. The other markets. The potential for correction. Okay. Well, is inflation going away? No, it's just getting rolling, right? Yeah. Okay. Is the world going to start holding hands and singing Kumbaya? I don't think so.
No.
It seems like we're posturing towards maybe something else. And then there's a stock market that hasn't corrected since 2008. Does that look like that's going to continue to drive? No. So you look at the factors that drive gold and the future. And I would say that not only have you not missed the opportunity, I would say that this is the tip of the iceberg.
I could actually get on board with you there. I haven't put a crazy amount of thought into it until you just said that, but I could get on board with exactly what you just said. I think the stock market, I actually did a podcast episode on it. I think the stock market's vastly overpriced right now and, ready for a correction, whether that happens in 6 months or, 2 years or whatever, but I don't know. But yeah, I could see exactly what you said taking place where gold continues to go up very nicely. Are there other precious metals? Is there a precious metal right now that you really like that you think people are just ignoring?
Not ignoring, but silver and gold, they move as a tribe, and the ratio of silver to gold it usually sat around between like 16 to 30 to 1, that in history, and now it's at about 85 to 1. And the reasons have nothing to do because there's all of a sudden just a less of an appetite for silver. They have everything to do with the manipulation of that silver market, not the physical silver market, but the actual paper silver market. So I'm just going to be very brief, not to muddy the waters, but basically you have what's called the spot price of gold. So when you say what's gold at today or what's silver at today, you're talking about the spot price. Now that's a paper traded leverage contract on the COMEX exchange in Chicago. All right. And that's going to be your benchmark. That's going to drive the value of your American Eagle or those bars you were speaking of. All right. Now, as it relates to silver, silver's a lot easier to manipulate because nobody's ever going to demand silver to settle the these trades that are done on the COMEX because they're done at like a $200-300 million level. And if you ever seen $200-300 million in silver, it's like a city block. So with those assurances that nobody's ever going to call their bluff and say, hey, bring me the silver, then you see these banks, it's called naked shorting. So they'll release these shorts into the silver market, but they're not backed by physical silver, even though it's illegal to do so. And it's illegal to the extent that the ex-president of precious metals trading for JP Morgan is sitting in a prison cell on RICO charges. And JP Morgan also has been fined $1 billion for doing this crap. So, it's something where the reasons why silver is where it is has nothing to do with the supply and demand or the desirability of it, but it's way out of whack to where it should be. So I think there's an opportunity there.
Does that make it more risky with what you just mentioned, though?
It does it in the sense that I will say this. Okay, you're never going to wake up and see gold went up 40% and silver's down. They move as they try. All right, it's just to the percentage in which they move. So the riskiness, though, that you speak of is in a bear market. Let's say gold goes down 10%, silver could very well go down 30%. Okay, so it's more volatile in that sense, but it's not risky in the sense where if you understand the macro reasons why you're investing in gold or precious metals, that's going to always benefit both. There's never a situation where one's up and the other's down. Okay. It's just the percentage to which they do that.
Interesting. Let's talk about your business and the growth of your business. Like what has been, one of the key, I guess, your value kind of proposition and what you've brought to the market that you think has helped you truly grow to where you're at today?
Yeah. I mean, look at, they say this is, we're so innovative and everything else, but, I didn't invent the iPod. I'm just selling just the right metals, it's like pretty simple. But yeah, I mean, you wouldn't believe this, Todd, but without exception, every single heavily marketed firm does what I was describing to you, sells proprietary coins and all, it does all that kind of BS. Every single one, without exception. The ones that actually do the right thing, you're not getting any education. You already have to be a veteran and understand what you're doing. And then you call them and you get, some kid with a, headset on that's going to sell you the metal, but you're not going to get the, the education and, the white glove treatment, so to speak. So our whole philosophy is, we only sell university recognized government minted coins and or, bars. All right. So we only sell stuff that you can Google search and you'll see it, everywhere because it is a widely traded metal. No proprietary coins, nothing obscure, nothing that fell off a pirate ship, nothing numismatic. So again, those things, that's why I always laugh at innovative because it's not innovative. That's just good business. Right. But that's basically what we've hung our hat on. And then the customer service, because with metals, since we don't make an AUM fee, since once you buy it, there's nothing quote unquote in it for us. There actually is. It's a very small-minded way of looking at it. But because we just make the commission on the front end, you find that this industry has a reputation for just not taking care of their clients. Once they buy the metal, they can't get their broker back on the phone. They have a problem liquidating it and things. So we treat our clients exactly like we would if we were making that AUM fee or, like family pretty much. So, once you buy the metal, even though we're not making that fee, we're going to call you quarterly. We guarantee buyback. So we'll always buy the metal back from you. We're not going to make any sort of a fee or commission on that. Whatever the market's trading it for, we're just going to facilitate that transaction. So, again, we treat our clients different than these other firms that just see these dollar signs. And then once they buy the metal, then it's the dollar sign just walked away. So treating the clients different and then selling the right metals at the right price. And that's, I guess, makes me Steve Jobs of precious metals. So who knows?
So just doing things, making it simple, really. Yeah, I mean, that's what it sounds like. I mean, you just instead of trying to make it confusing and difficult to do business, you just start making it simple and easy to do business with.
Yeah, and look at here's something that I think will resonate with you. The word educate, right? Okay, in the sales aspect of that word, it means two diametrically different things. Okay, because you can educate to sell, or you can educate to inform.
Mm,
Educate to sell is giving you just enough information to get those dollar bills from you and give you my product, or
yep.
whatever I'm selling you.
Yep.
Educate to inform is giving you enough information for you to be a master of that subject or a master of that investment, so you understand it. You understand what it does, what it doesn't do, and so that you're confident in it, and that you're comfortable, and that it actually meets your expectation. We educate to inform. We don't educate to sell. And it's a very, very different thing. The
Yeah.
whole
Very different.
industry, in my opinion, educates to sell.
Yeah.
That's at least what I believe.
Yeah, and like you said, educating to sell, all it does is provide enough information to where you feel comfortable to then buy, but you don't feel comfortable enough to really do true due diligence, to really understand what you're getting into, to make the best informed decision possible. And that's what I think a lot of the companies are afraid of, is if they give people enough information to where they're truly informed and understand what they're doing, they're going to lose a sale to somebody else. And so they don't want to lose that sale to somebody else, so they just educate to sell. That's it.
Yeah, exactly. Or I mean, if you are selling proprietary coins at a
Well,
130% markup, or if
yeah,
you're doing things not the correct way, then yeah, you're gonna just give someone just enough information so that I can see that, and
yeah,
they
and
do
then they
the
go,
deal. But we're
mhm,
going to explain, hey, this is what you should be buying. This is why. This is the logic. And so
yep,
then people are really confident, and then they're not calling us, mad in the future. Like, hey, this didn't do what you said it was going to do, because their expectations are in line with what we educated them to.
yeah, yeah. Well, to me, it makes a lot more sense. These are clients of yours for long term. Um, they're going to continue to buy coins and bars through you, because you're providing them the information that they need and not just trying to get them to do a transaction. I think that just makes a lot more sense for any company, quite frankly, for any industry. I had a question about, you mentioned IRA. How do you invest with your IRA and actually getting that physical gold? Obviously, you said you can't touch it yourself. It goes in a depository, but how do you actually do that with your IRA without getting penalized?
Sure. So Ron Paul actually was the one that pushed this through. So before the late '90s, you could only invest in pretty much stocks and bonds with your retirement account.
Yeah.
And so Ron Paul, it was, people actually wanted to be able to have more control over what they could invest in. And obviously, it's their money. And so there was, Ron Paul was the guy that pushed this through, but it's what's called a self-directed IRA. So they were established in the late '90s, and it's just a specific type of IRA that allows you to own hard assets or alternative assets in addition to traditional assets. Okay. So that's what the self-directed IRA is. And so to the extent that you need that to invest in physical metals, that's what we'll do. We'll help you set up one of those with the custodian. And what the custodian of the self-directed IRA does is they rent space at one of these vaults, like Brinks or Delaware, one of these IRS approved vaults that can hold metal in IRAs.
Mm-hmm.
And then, of course, you buy the gold, we ship it to one of those vaults. They inspect it, they x-ray it, they ultrasound it, and then it will just simply sit there at your custodian's, space in the vault until you want to A, liquidate any of that gold or silver, or B, you can take possession of it. They'll pack it up, ship it to you, and then it's
Yeah.
just a distribution, just like if you took money out of your plan.
Yeah. 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 You just have to know that you're going to either pay the fee if you take it early, or understand what you're doing there. But yeah, that makes sense. And we do the same thing. We have a lot of real estate investors of ours that invest through a self-directed IRA, and you can invest in like horses and all kinds of cool stuff through
Yeah,
these self-directed IRAs.
absolutely. Yeah, yeah. And the good thing is that they're really cheap, because just like the name
Yep.
sounds, self-directed, right? So basically the custodian really is just a shell under which you're just doing all your thing. I mean, pretty
Yep.
much everything, in my opinion, is outsourced. I mean, even if you want to invest in stocks, they hook you up with the TD Ameritrade account and they link it to it.
Yep.
So nothing's really germane to the actual custodian besides just reporting the holdings to the IRS. Good old Uncle Sam.
Yeah, I mean, finding a good one that's going to at least give you a little bit of guidance is helpful. But yeah, you're right. They're there to make sure. Well, hopefully, they're there to make sure that you're not messing your IRA up, and that you're not going to end up paying big fees and taxes and all kinds of stuff. So, but yeah, it's really cool that you can invest in precious metals and real estate and, like I said, horses and all kinds of really cool things that you can actually invest it with your IRA if you want to get it out of the stock market a little bit. So you were going to say something.
Yeah, and just real quick, so the whole don't mess it up. So yeah, that's why the IRA, in my opinion, is the safest way to invest in gold, because there's strict rules as to what you can invest in, because they don't want you messing it up, because you're owed some tax, or they're owed some tax. So everything has to be 99% purity, nothing collectible or numismatic. Everything's inspected, x-rayed, ultrasounded. So that it's going to be genuine, it's going to be in perfect condition, and you're not going to get, like I said, gold that fell off some pirate ship somewhere and pay $100,000 for a coin. And it's not necessarily to protect you, but it's to protect their tax money, which indirectly protects you. Yeah.
Still protects you. Yeah. Like it. Man, Brandon, what have we missed? Anything that you think our listeners need to know that we haven't hit on?
Listen, I would say if any of this resonated with your listeners, if anything I said, got them nodding or like, wow, that's compelling, there's a reason. And the reason is simply because it's true. The logic is bulletproof, and everything I said is the absolute truth. The only reason why this is the first time they might be hearing about it is what we mentioned. When you have, the most powerful government in the world and these trillion-dollar industries not wanting you to hear about an investment, you're not going to hear about it, right? And so I guess to the extent that your listeners' instincts are telling them that this is something they should look into more, they should follow them, because this is the best time in my career I've ever seen to be looking into buying gold and silver. And I believe that this is just getting started. I mean, we are in a lot of trouble with the debt and just a lot. I can go on and on. We have about 4 more episodes worth of material there, but yeah, I mean, I guess that would just be it. Just listen. If your intuition or your gut is telling you that this makes some sense, then give us a call, because we're very low pressure, and we'll at least fill in your questions, clarify anything, and provide you the education to make a decision.
Yeah. I think we're in a crazy AI bubble, not AI technology. Like, that's just going to continue to improve. But I think economically, we are just in a crazy AI bubble as stock market. But whatever. I digress. I got a couple last questions. Favorite book you can recommend to our listeners?
Favorite book? All right, we go to. I love Crime and Punishment. I love that book just because it's like a very interesting way of posing the relativism of like morality, right? At what point do we not become the judge of what's moral and immoral? Anyways, if you haven't read it, it's a good one. Confederacy of Dunces, which is an American author, William Kennedy O'Toole. He was the youngest tenured professor at Tulane. He unfortunately unalived himself. But this was published posthumously, won the Pulitzer. It's a really funny satire on American cultures, and he uses a really interesting literary mechanism to satirize it. So those would be the 2 that I'd suggest.
That's cool. Two new ones I haven't heard of. 3. What are your 3 pillars of wealth creation?
So my 3 pillars of wealth creation. Number 1 is how you view your assets and liabilities, right? If you really, really want to create meaningful wealth, like we're talking like meaningful wealth, then you need to view yourself as your biggest asset, okay? Because so many people are shying away from what they're good at or a good idea or whatever it may be because they view their bank balance as or their 401k or their benefits or whatever as their asset, and they don't view themselves as an asset. If you view yourself as your biggest asset, then it's going to change a lot of decisions you make, and in my opinion, for the better. I mean, it's going to really maximize your wealth or your earning potential. So that's one of the pillars. Okay. The second pillar is this, and this is something that I'm guilty of not following, which is, it's amazing what compounding or small little, things can do over time. And I know things was a real specific way of describing it. How interest compounds, how something that you think, oh, that's not a big deal. It is a big deal because, man, you look back and you're like, I'm so glad I put my money here because, what I thought was something small is bigger. So I guess the second pillar would be, don't ever, discount or underestimate something that gives you any sort of a return or any sort of a sweetener there. And then I guess the third pillar would be, listen, just make sure you are up with your bills because this system is run on credit. And it's just amazing. If you can keep your credit up, your opportunities are endless. If you can't, your opportunities are almost nil. So, I mean, you need to make sure that you are right in that world, in that credit world, because it opens doors that you can't even open if you're a millionaire, if you're not right in that world.
Yeah. Yeah, very, very, very sure there. Well, Brandon, I really appreciate you joining us on the show, and lots of good value. Look at listeners. I think anybody should have at least some silver or gold or both in their portfolio. Whether it's a lot or a little, I'll let you decide as a listener. But Brandon, how can our listeners get in touch with you, learn more about what you got going on, and kind of check things out?
Sure. So if you just hop on our website, it's thormetalsgroup.com. So metals is plural. So my last name is Thor, like the God of Thunder. So www.thormetalsgroup.com. You can fill out a form there, you make an appointment, and believe me, if you mention the show, I'll call you personally. I have no problem doing that. And then the other way is, you know what, the website's good, and then you can dial our number, which is 1-844-944-THOR. So pretty easy to remember there, 844-944-THOR. And so you call us. You're going to get one of my brokers. I keep the company small by design because I've trained every one of them. And again, if they mention you, they can talk to me directly.
Awesome. Really appreciate you. Appreciate the time. And you have a cool last name. My son would love it. So, yeah. Anyways, you have a fantastic rest of the day, man.
You too, Todd. Take care.
Hey, thanks so much for listening. I appreciate you being a loyal listener. I would love to have you go on to our Facebook page and subscribe, give us a thumbs up, go on to iTunes or wherever you listen and give us a rating and review. Don't forget to subscribe. Your rating and review just helps us push this out to more and more people and continue to grow our audience and hopefully positively affect a ton of people out there that really need this and want this. So the other thing I've got for you is a free ebook on my website. So go on to venturedproperties.com, and download our free ebook on real estate and on syndication. And I've got some data points in there, some really good stuff for you. So I'd love to have you take a look at that. It's free. I'm not expecting anything from it. And also, look, if you want some help in multifamily, want some help learning, growing, getting your business off the ground, I would love to talk to you about what it would look like to work with me potentially and see if that's a good fit. So you can go to coachwithdex.com and check that out, and we can definitely have a call. Thanks a lot for listening. You make it a fantastic rest of the day. I'll catch you on the next episode.